Hey guys, we're looking at a pretty decent day today. Most risk on is having a good day. As of this upload, we're approaching the Fed decision tomorrow, and the market still does overwhelmingly see the Fed cutting in the next meeting, which could help risk on assets. It'll be important what the Fed says. Does Jerome Powell appear hawkish or dovish despite the potential cut? It also matters what the wording is for future cuts. And is the Fed worrying more and more about labor market or about inflation? Inflation has been ticking up from its lows, and the labor market has been weakening, so the Fed is in a bit of a tough spot. Be that as it may, the market is already heavily anticipating a cut. I don't think the Fed's decision on a cut tomorrow, if they do give one, isn't going to catch the market by surprise. The market already anticipates this. So what's really going to be important for the market is hearing how the Fed speaks. Like I said, are they hawkish or looking to be more restrictive in the future with cuts? Or are they dovish and looking forward to more cuts in the future? And while it's very likely we get a cut in the Fed meeting, what about future meetings? Going all the way into the summer of 2026, the market anticipates a high likelihood of only one more cut by then, with a 41% chance of 2 cuts by the summer of 2026. So while we are in a cutting cycle, the market's going to be wondering, when are we getting our next cut after December? Is the Fed focusing more on inflation, or are they focusing more on the labor market? The wording from the Fed is going to be very important, and I think the market is somewhat pricing in the cut. It's not going to come as a surprise, essentially. Quickly glancing at the Bitcoin miners, they're having a decent day as well, and that's not very surprising because Bitcoin's having a pretty good day too. I do want to go over some other recent news, but first off, looking at Bitcoin, you'll see that we started this uptrend once we got out of our rough fall that we were in, our rough downtrend. This is on the daily, but looking at the 4-hour, it's clear that this was a descending resistance for us. Once we broke out of it, you saw a nice reaction to it. As it stands, Bitcoin's death cross that we recently witnessed did mark a bottom for Bitcoin, and it has been in a recovery ever since. We're approaching an important zone, this 94,000 that we talked about. That was a previous support, resistance at times, and then flipping as a support. And we did have an accelerated fall off when we didn't hold 94,000. In my opinion, 94,000 is very important to break. That'll show that we're breaking this kind of a longer term downtrend. We're in a short term uptrend within a longer term downtrend. We need to break out of this red line, this red descending resistance, which also includes breaking 94,000, which could very likely take us to the 50 MA at about 98,000. It would be very encouraging to see Bitcoin break over 94,000, which is currently its resistance. It seems to be getting hung up here. If we can break 94,000, we're testing our major moving averages. We're about an 8% move from testing the 50 MA on the weekly, which is an important, crucial level to break. This, in my opinion, is one of the most important things to watch. If we can see Bitcoin break the 50 MA on the weekly, that'll be a fantastic sign, and it'll possibly give an answer of, is the 4-year cycle broken, like some people are wondering. If we find resistance on the 50 MA weekly, it's likely we're going to continue in a downtrend, just like we did in 2021, just like we did in 2017. Once this became resistance, that kind of confirmed the bear market continuing. We did get our break under the 50 MA. Next is likely a test of the 50 MA. If we find it as resistance, we're likely to come back to our lows. But if we can break over the 50 MA weekly for the first time in any cycle after it's been broken under, that would be a very optimistic sign if you ask me. I do want to go over this article regarding CZ and his thoughts on the 4-year cycle. CZ described the current adoption cycle as distinct from previous waves. Earlier cycles were dominated by retail investors. This cycle reflects significant institutional engagement. We've seen more institutions come in than probably previous cycles. I don't think there's any doubt in my mind that that is factual. There's no probably about it. This bridging between grassroots movements and institutional finance positions Bitcoin for broader integration into the global financial system. And while the 4-year cycle has given us a clear trajectory for the bull and bear markets, he suggests that external forces, including government monetary policies, may now have equal or greater influence. He points to US rate cuts, QE as factors that could drive liquidity into crypto, saying that the next cycle could diverge from historical patterns. This right here is M2 supply and Bitcoin, and you'll see that there is a clear correlation. And we tend to get a peak in M2 right around getting a peak in Bitcoin cycle. I think Bitcoin not only follows its 4-year cycle, but also heavily relies on M2. And it's not just one or the other. Bitcoin has a halving cycle. Every 4 years, the Bitcoin supply that gets put out into the market gets cut in half, making Bitcoin in the future and after every halving even more scarce, which does impact price. You tend to get a run-up in anticipation of it, a buy the rumor, sell the news, if you will. But you'll see this clear correlation with M2. As it grows, so does Bitcoin. As it falls off, so does Bitcoin. And while M2 doesn't always time the top, basically, they do trend in the same direction very often. And when you see M2 bottom out, you tend to see crypto bottom out as well. For those of you that don't know what M2 is, in simplest terms and written for even a child to understand, imagine a big sandbox where all the money in the country is kept. M2 includes most of the money that's easy to access, like cash, checking accounts, saving accounts. And when M2 grows, it's the total amount of that money in the sandbox getting larger. If the government adds more, like stimulus checks, banks lend out money, the sandbox gets bigger. When the sandbox gets bigger, people tend to spend and invest more. If lending gets restrictive, if people aren't spending as much, M2 gets smaller, and the economy can then slow down. Bitcoin, as you can see, has a clear correlation with M2, and I think that is a clear factor driving its cycles, along with the fact that Bitcoin has a halving every 4 years. It's not just one or the other, but I think it's both. There are many factors at play, and I don't think Bitcoin's cycle is what it is just because of the 4-year halving, but also because of the money circulating around the world. We do have some news. Not only is Vanguard allowing ETF trading for their customers, but Charles Schwab plans crypto trading expansion for the first half of 2026. The company will initially test the new trading products with employees and a small client group before a broader rollout. And this move reflects growing investor interest in digital assets. And it's not mentioned in this article, but they were saying how visits to their crypto page, to their crypto information page, exceeded their expectations. People are interested in crypto. People want to trade these spot ETFs. And now they're finally letting their customers do so by mid-2026. And they also may be considering acquisitions in the future. Are they going to buy an exchange possibly one day? I think there's a likelihood of it. We do have news that Michael Saylor and MicroStrategy announced another Bitcoin buy, this time to the tune of 10,624 Bitcoin. Strategy's average price is 90,615 per Bitcoin, and they now hold 660,624 Bitcoin, which they acquired for $49 billion, and their average price on all of their Bitcoin is 74,696. All this comes after a post from Michael Saylor saying back to orange dots. You might remember last week he mentioned, what if we started adding green dots? People were wondering what this signifies. Does it mean he's going to be selling his Bitcoin? No. It ended up being a $1.4 billion reserve, and the company's CEO, Fong Li, clarified that they don't need to sell for the next 3 years, putting us well into the next cycle for Bitcoin. This USD reserve is expected to cover around 21 months of dividend and interest payments, with plans to further increase the reserves over time. One thing's for certain, the money in the system is always going to expand, is always going to grow. Money is always going to be printed, and this money will always flow into hard assets, whether you're talking about gold, Bitcoin, real estate, stocks. How are you guys feeling about the upcoming Fed meeting? Are you anticipating a cut? Are you anticipating a dovish or a hawkish Fed? And do you think Bitcoin cycles are broken? Now, real quick before I go, this is Bitcoin basically halving to halving, 2012 to 2016. You got 2016 to 2020. The purpley pink line is 2020 to 2024, and the orangey is 24 to 2028. You'll see from halving to the next halving, Bitcoin always appreciates in price, but you do get a point kind of in the middle where things do tend to pull back, trend down. If it's anything like past cycles, it's possible we have around a year left of this pulling down. My take is things are changing for Bitcoin. Does that mean buy heavily if we start recovering? Not necessarily. I think you can't go wrong with just DCAing. It takes the guesswork out of it, and you get to continue to acquire more Bitcoin, and maybe even go heavier during harder times. Go lighter during the good times. One thing's for certain, the last cycle was the last one where you could reasonably acquire a Bitcoin as an average person. Bitcoin went down to $15,000. In my opinion, it's never going there again. And that was the last cycle where the average person could try to accumulate Bitcoin and over time possibly acquire one entire Bitcoin. Who knows where our next bottom ends up being? Could be the 50,000s like some people hope for, could be the 60,000s around the previous peak of the last cycle, which is very plausible. One thing's for certain though, during the hard times, during the rough times, you want to acquire Bitcoin. But anyways, thanks as always for watching guys, and I'll see you on the next one.